If you're a crypto bro, you were probably popping champagne last night as Bitcoin hit 123,500, and today you might be clinically depressed as we're all the way back down at 116,000. Oh man, numbers we haven't seen since the beginning of the weekend. It's at times like this that we need to zoom out because we're still broadly in an uptrend. We hit the exact 1618 Fibonacci extension level. Charts were overheated and everybody was going in leveraged long. Of course, with a setup like that, we're going to see a pullback. But looking at the broader markets, futures are up nicely overnight, and we could have an all-time high open for the S&P 500 near 6,300 or so. On the back of all that, NVIDIA also surged overnight as news dropped of sales opening back up to China. And we're getting really close to that $175 near-term price target that we called out on the breakout a couple of weeks ago. The only question that remains now for the most valuable company in the world is if it can survive this one dreaded gray swan event. So join me as we look at the key charts for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a lovely weekend. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really helps the content get out there to more people, and it also helps me carve out a glimmer of hope and value in this meaningless hamster wheel of an existence that we call life. I'm so sorry. I just watched a Vanna Herzog documentary over the weekend, and I think he rubbed off on me. As markets keep ripping to new all-time highs and seemingly shake off every bit of bad news, we want to take advantage of that momentum, of course, but we also need to be ready for weekly consolidation when it comes, and it will come, as well as eventual corrections. Those are going to come too. But as we get into the meat of earnings season this week, and really tech earnings at the end of July and beginning of August, we are going to learn a lot from the market reaction. If tariffs or other rising input costs are cutting into bottom lines, how is the street going to feel about that? And could this slow us down or spur on that correction? I'm not saying that's going to happen, but I just want us all to be ready and know what's happening in the backdrop. For me, that means trimming a few riskier positions that are already in great profits but are a bit overextended on the charts. And this week is really going to be about the financial sector, with just a few tech names and semiconductors reporting a bit early. But again, as I just mentioned before, we are looking out to the last week of July and the first week of August for the meat of tech earnings. So the things I'm personally on the lookout for in the week ahead are: on Tuesday before the market open, we have JP Morgan Chase reporting, we have Citigroup, we have Wells Fargo, BlackRock, and State Street. So lots of banks there. And then before the market opens on Wednesday, we have Bank of America, Goldman Sachs, Morgan Stanley, Johnson & Johnson, and then ASML. And then on Thursday, before the market opens, we have Taiwan Semiconductor, TSM. And then after the market close, we have Netflix. That's always an interesting to watch. And lastly, on Friday, before the market opens, we have American Express and Charles Schwab reporting as well. So I got a lot of chart requests from you guys on Friday's video, and I'm going to go through the key names that we cover here all the time a bit more quickly so we can focus on those requests today. And I haven't looked at any of these names yet because I want you to see how I assess a chart for the very first time, so you can hopefully take away some value from that and apply it to your own analysis. Also, I haven't researched any of the fundamentals of these companies. I'm just going to assess the chart for strength and weakness and value zones based on what the price action is doing. And of course, none of this is financial or investment advice. So let's get into the charts, and we're starting here on the S&P 500. And for more of an analysis on longer term price targets, check out the video from Friday for the S&P 500. But really right now I'm in on the daily, and we're just seeing that consolidation take place a little bit right now. We're most likely going to have that gap up tomorrow morning, which isn't showing up here on the SPX. But as long as we are staying at that breakout from our previous all-time highs here at 6150, that is a good zone to be in, and I would like to see price action hold above this area for the near term to at least give us 2 to 3 weekly candle closes. Let's say 3 weekly candle closes. Just like I talked about for the Bitcoin breakout on Friday, if we see 3 daily candle closes, that confirms a breakout on the daily time frame. We obviously have 3 daily candle closes here, but on a weekly time frame, we would want to see 3 weekly closes above to really make this more of a long-term trend that is going to sustain over the weeks and months ahead. Moving on to Bitcoin, and you can see that great weekly candle close that we had here, which closed above our weekly breakout zone and our monthly breakout zone. We've had 3 daily candle closes above all those breakout ranges, so it's confirmed on a daily scale. And now on a weekly scale, I would love to see 3 weekly candle closes above this as well. And broadly speaking, as we get into breakouts and uptrends, we've already had 3 up weeks in this swing, which is a great sign to confirm a turnaround. We obviously had to pull back today, and we can just look back to past periods to anticipate how long this run could last. And if we average out all these weekly runs across Bitcoin's history, you'll find that most of the runs last for about 6 to 7 weeks. So that gives us a rough time frame. But the main reason I'm here on the weekly is to look at this downtrending resistance on the RSI. We've had this massive bearish divergence that we've talked about before that has been forming since early March of 24. And while we've been printing higher highs in the price action, the RSI has been printing lower highs, so that massive bearish divergence. And we're just coming in to test this trend line here. We might actually test it this week if we can bounce away from this little correction that we're experiencing currently. So if we break through, that would instigate, most likely, that parabolic phase of the bull market that we've all been hoping for. But if this rejects and breaks back below the 62 on the RSI, that would definitely be a warning sign to watch out for. There's also a more neutral path where perhaps we reject and we tighten up between the 62 and this overhead resistance before breaking through in a few weeks' time. So that's another thing to watch out for, but I will keep you posted on this, and a weekly close above this downtrending resistance would be a great sign for continuation. If we go into the 4 hour, you can see this bull flag that we had forming that we broke out from on Sunday afternoon, and now we've come back down and we've corrected sharply, and we've found support just below these swing lows here at 116,500, which can sometimes happen before you find a bounce, that you just sweep those lows slightly to fake folks out before it bounces away. So we need to see what this can do to continue the uptrend. But really, we're in safer territory until we get to that previous all-time high breakout zone, which I would consider this swing right here at 112,155. You can see we also have that previous peak at the same level right there. So dipping anywhere down to there would be okay. And I would really want to see no candle close below that 114,500 where that weekly trend line is, just to really show us strength. If we're looking at the Confluence model as well, we are getting into support from the center cloud on the Confluence model here at 116,000 roughly. And our 4 hour RSI has now reset to the middle of the range. And if we're in a strong uptrend, I never expect the 4 hour RSI to go back down to the bottom. It can stay elevated for quite some time. And I'm just looking for any good entry for the 1 hour RSI to bottom, which we just had. So we have a bit of confluence there. That's my checkbox. If I'm getting in on a trade in the middle of an aggressive uptrend, has at least the 1 hour, 30-minute, everything on down, bottomed on the RSI, and that's a safer entry in the middle of an uptrend. Looking here at Solana on the 1 hour, you can see that the Solana 1 hour RSI almost bottomed out as well. We are just a little bit shy of the bottom, but that's okay. Sometimes it doesn't bottom all the way, especially because there's been a bit more momentum in Solana right now. We had this descending wedge that you can kind of see sketched up here that I was scouting for a break up earlier, because descending wedges normally break to the upside, but we broke down. The good thing is we found just a bit of support because there is a bit of a double top in play. If we would break this low in the middle at $157.84, that would put the double top into play with a price target down back at the 50% at $147.30, which is not great. So we really want to see this hold as a low for Solana. If you're wondering where I'm getting that 50% from, if we go back out to the 4 hour time frame, I'm just drawing the Fibonacci retracement tool from our low here on Sunday, the 22nd of June, to our recent tops here, and that has the 50% level coming in right there at 147 for this swing. The other slight sign of weakness is that we had this short-term underside support, this uptrend that also broke. So it seems like we have a good bounce away right now, but I am just looking out to see if we potentially reject from the underside of that and then form a new low, which would put this price target in play. So Solana has a little bit of work to do to avoid this warning sign. I'm not saying that it's over for the run for Solana, but we just have to be aware of that downside target. If we go back out to the 4-hour just to look at overhead price targets, we obviously are still battling with the 200-day moving average, and then we have the top of this range at 168. So anywhere between 163 to 168, expect resistance in that zone. And then if we can break through, I have the line drawn here at 178, but really 174 to 182 is the next resistance zone. And then the local high of the 187.50, let's say, is that last overhead resistance before we get into the major 50% at 195 and the 200 psychological level. So Solana, I know that's a lot of values, but broadly has much more resistance overhead and has to do much more work than something like Bitcoin that is in a blue sky breakout. Okay, starting early with a couple of the requests, we had one request for CleanSpark, and as you can see on CleanSpark, if we draw the Fibonacci retracement on this major range, we are actually right now into the 382 level, which lines up with this past resistance line from our previous consolidation that marked out all these tops and bottoms and peaks. Again, these aren't exact to the dollar and cent, but you can see here it was really close. These are more of a range. And we're right into that. So both on the Fibonacci retracement tool and from the price action, we know we have a bit of resistance and we need to get through that. And then the next big target overhead would be that 50% level at $15.62, which is also confluent. If you run a fib extension from this, that's right where the 1.5 to the 1618 extension level is. So these two zones right now are the biggest ones overhead to watch. Not financial advice, but if you are in CleanSpark and you are looking to unload some of it, this volume cluster right here is going to be our biggest challenge. So if we're starting to get into this level and you are in profits, it might be a good zone to consider taking some off the top. If we can push through and there's a lot of momentum behind Bitcoin, that's great. And you might actually get through this zone where the volume drops off a bit more quickly. But I think there are going to be lots of sellers up here in this range as we get to the $20 and above, because many folks have ridden this up to this $20 range several times and didn't take profits. And they're saying, gosh, this has been a long, painful ride, and I am now going to get out. So something to watch out for on CleanSpark as we get into these resistance levels and a lot of selling pressure overhead. Okay, the other minor request that I had was RIOT, which I don't have anything marked up on my chart because I don't have a position on it, but I'm on the weekly time frame here just so we can get a picture for a lot of the price action. And if we zoom way out to the 2021 bull market, you can see we are nowhere near those highs. And a lot of these companies did a lot of dilution. So, I don't think we should take that necessarily as a sign of weakness in the chart, but we need to assess just what's going on right now in the local bull market. And what I would say, just taking a glance at RIOT, I would first see if we have a bit of a trend line overhead. And yep, look at that. Don't you love how those line up? So we are just into this trend line. We had 1, 2, 3, fourth time retest. So as we talked about in Bitcoin, often fourth time retests can lead to a breakout. So watch this week to see if it can break out from this. You might consider this within tolerance. This would be our fourth time rejection. And then we know it's a stronger overhead trend line. But generally speaking, we want to be within 0.5%. If we measure that out, 2.39%. So it's not really within tolerance. I would consider this a potential attempt at a fourth time breakout this week. So keep your eye on that. And then the other thing I look for when we are assessing charts like this is volume picking up? Okay, volume's picking up from the lows. That's a good sign. Beyond that, what is the RSI doing? Well, if we go here to the RSI and we're on the weekly still has room to run. So that's a good sign. And then we go to the daily. And the daily, it's a bit overheated as we're getting into that. But if you look at past peaks, let's see what the daily has done. And if we look at these past peaks, the daily can definitely spike up a bit more than it has right now. But we are definitely closer to the end of the move than the beginning. So something to watch out for there. And notice I'm not pulling in any of the InvestAnswers indicators for buy and sell signals. I just want to assess these charts purely based on the price action. And if we go down to the 4 hour, the 4 hour is getting close to a bit more neutral territory to reset here on this little bit of a pullback we've had. And I'm sure the 1 hour is fairly neutral. Yep. So you can see the 1 hour swings bottom to top. Maybe we go back down this week and then attempt that breakout, but definitely watch this to see what it can do this week. And if we can break through that level and hold above. So I would be looking for, let's just go back to the daily. So if we are here on the daily, if we break through, I'd be looking for a break and then a back test in the next couple of weeks and then a continuation from there. If we can't close, 3 daily candles above and we break back down, that would be a false break, and then you would be looking out to the downside, and it might be time to exit if you have a position in this. But hopefully that's helpful just in the current assessment of RIOT. Okay, if we're going over to HIMS really quickly, we had a very nice bounce today, so some strength coming back into this chart. We still have resistance overhead right here, which is both our 61.8 Fibonacci level, and it's also where we've had these 3 peaks right here. But we're generally finding support above the 50%. Now we can talk about a similar, perhaps 4th time breakout for this. So we have 1, 2, 3, perhaps we reject tomorrow and the next day, and then we attempt to break out. And then our next zone that we're targeting overhead is where the center cloud is right here. And we have this resistance line with the VRVP at $56. So $56 has been my near-term target. If we look at some extensions beyond that, the 786 extension right now is actually sitting right at the top of the Confluence Cloud at $73. So could we get up there? I don't know. I think they would have to announce weight loss drug replacement for what they lost in the US and other markets with their Novo Nordisk partnership. So we'll just have to see what this can do. But honestly, just for a swing trade and for my options positions, I would be looking to layer out around that $56 already. Okay, this is a trade I got into last week on SOFI that is a bit riskier. So I want to preface it with saying this can be a very risky play. But the reason I got into it is because on the larger time frames, let's just zoom way out here, we have this massive cup and handle pattern, which is a continuation pattern. So we have the cup here and the handle, and we broke out from that. So near the breakout zone is where I got into this trade, and I'm not expecting to hold this long term. I'm just looking at the price target overhead at around $30, and we're getting into earnings. The weekly RSI still has room to run, and our candles are increasing in size. So I'm chasing this a little bit. I didn't get in early, but I'm looking for another blow-off move that's going to lead to the next blow-off top. So I'm just playing this with short-term expiry calls, and I'm seeing if we can get up to that price target. If we look on the daily, we have earnings coming in on the 29th, and I'm wondering if that could be the catalyst. So on the daily, while we've seen on the weekly that we have those larger candles, I'm just on scout for gap up opens and then larger daily candles starting to form. I'm not saying they're literally going to look like that, but signals of that blow off top incoming to exit my options position. Again, this is not a normal trade for me. I don't like to chase things like this, but this is just a very small position and something risky that I wanted to play to see if we are going to get that euphoric move and if I can just capitalize on it with those options contracts. Okay, coming back to a trade we got into last week, which is OKLO, and we had this falling wedge. We were into support both on the 61.8, and we had this falling wedge confirm the breakout. So unlike the Solana chart where the falling wedge broke to the downside, the normal pattern for this to break to the upside, and I just actually need to sharpen this up because it wasn't to the right point. And the opening of the wedge, we map that here for our price target. So today we had a great move up over 10%. I have some short expiry calls on this, so I might get out of some of those a little bit earlier, and then the spot I'm holding I will let run a little bit longer. And we would definitely anticipate maybe a bit of resistance at the top of the range here at all-time highs, but the price target here, which also matches up with a fib extension at 78, is between $76 and $78. So that's my near-term price target for that on the move on OKLO. And then we just have to reassess things from there. Okay, I just wanted to circle back to UPXI because it is a Solana treasury play that we got into a couple of weeks ago. They had this massive drop on earnings. And if you recall, we had this base here and I was playing trades off of this base and I had my stop just below. So when we dropped on earnings, I got stopped out of my position with just a small loss. And then I was able to reload down here as we were forming this base. This looked weak to a lot of people, but abnormal moves like this, the market doesn't like them, and it usually will find value. So we've bounced away. This is already over 100% gain just on spot. My options contracts are doing much better than that 100% gain. I'm starting to offload them a little bit because we got some resistance here on the 38.2, and also I'm offloading them because these are very short expiry contracts. I only got them for a few weeks out. So this isn't something where I have a lot of time value that I can play on that options contract, but a little bit of resistance here, and then the 50% of this local range at the $7.80, let's say. Those are areas where I would anticipate resistance, and then we'll just have to see if we can close this gap here at $8.68. If there's continued momentum in the crypto space, this could do quite well, but this is a higher risk play. Another one that I'm starting to get out of just to take some risk off the table, and I'm happy with the profits I've made on this just as a short-term trade. Okay, last few names I want to get into for potential setups before I get into the chart requests, and that's some of the quantum computing names, which you can see by this chart have run hundreds of percentage points. Let's just see, this is RGTI on that run up. Oh, ran 2,800%, no big deal. But these run on news and then they cool off and find value and then they run again. So this was on the announcement here of the Google Willow processor. And then Microsoft had a new processor they announced where they invented a new state of matter. Don't ask me about the details of that because it's above my pay grade. And right now, this massive wedge pattern that we've had forming since December, I was watching because I looked like it was breaking to the upside, and I was watching for a back test for support to confirm that breakout, and we broke back into the range. So now I'm just watching this to see what it can do. We have our point of control, our most traded zone here at $11.54. I might consider layering into a little bit of position if we get there, because we did break these previous highs and we have been making higher lows. I guess you could argue that this was a lower low here, but then we made a higher high. So this is just figuring out what it wants to do. But if we look at another couple names in the quantum computing space, a lot of them are in this similar wedge pattern, but some are looking stronger and are already breaking out. So I'm wondering if this could be a laggard. And the price target, right now we are at $12.77. If we broke out from the wedge right where that happened last week, that would be $31.92. If we break out now in the future, that might be a bit lower. That could put us, let's just say that's $31. Let's see what this can do, because it's going to have to make a decision by the 30th of July. So by the end of the month, we're going to see what happens with this wedge. And let's look at the other names. Okay, here we have QUBT, which is one of the stronger names in the space. Again, you can see that first announcement on the Google Willow quantum computing processor, and then on the Microsoft announcement, and this has kept running up since. And we've had strong underside support in this run up that we just bounced from the last 2 days. So I'm watching this, and then we also have overhead our 1, 2, 3 with a little wick faking out. Are we going to get that fourth time breakout? So this is another one that I'm watching in the quantum computing space, but this one is already way more extended. If we just look back to the April lows here on this one, it ran almost 300%. So you can see how there can be great gains to be made in these if we are just trading them. And here we would be looking for a breakout play. And then if we're looking here at IONQ, which is another great name in the sector, you can see we have that similar wedge pattern, the similar hype run up here on the Willow processor, and then on the Microsoft news here. Terrible drawings, sorry. But again, we have that 1, 2. Now we know third times are most likely rejections. And now we need to see where we find support on this pullback, and then can we break out? I'm not going to give a price target right now because we need to see where that can eventually be. So I'm just watching this space right now. The RGTI chart looks like the strongest potential of a breakout of all of these right now. And these other names, I'm just watching them. And if this pulls back and we say find support way down here at $27, we're all the way up at 42 right now, that would be a great value zone. I mean, they just bounce like crazy. But if we find support somewhere else, I'm going to be scouting that bounce and then seeing if we can get a lead on playing that fourth time breakout. And if there's another big news announcement that really brings more hype into the quantum computing space, this could go on another run as well as the other names we covered. Okay, starting here with the chart requests, and this is SQNS, Sequence Communications. No idea what they do, but I imagine they help people communicate. And there has been a massive breakout here, so I'm assuming it's a treasury play. It must be, right? Or they just, I don't know, found a cure to cancer or world hunger. Anyway, these ones right here on these breakouts are hard to chase, but let's see what we have going back in time. All right, so if we just go back in time, let's even just go to the weekly so we can assess a lot of this price action. And on the weekly, I would say that's not a pretty chart, but I guess the things we can learn is we have a base here, and then we made a slightly higher low right here. We had this volume kick in, which I imagine it has to be a treasury play, right? And if we go back into the near term, we can see that, we have this gap that we might close overhead at $6.22. And let's draw that there. So that would be our first anticipated resistance right here. But if this is a treasury play, and I don't know if it is, I'm just going off the price action and making that assumption, I wouldn't want to chase this right now because everything that you've seen in the past here is pointing to weakness in the company. And now a big event happened, and we need to see where that value settles. Could you get in now and have this run way up? Sure, there's a chance of that. But could you get in now and could it just get to this zone here on the gap close and then drop way back down to this volume area before going back up? That could happen too. So names like this, just like we saw with UPXI, where it had this huge spike and then it was finding a base and then it dropped out of bed and found a very solid floor. Finding that value zone can often be a much safer and smarter play. Think of this almost like an IPO. Like with IPO stocks, you'll see like whatever is the IPO price, it'll spike up and there'll be some hype and then it comes crashing down. And that 18 to 24 months after an IPO where the stock finds its value base before moving on up, that can be a great time to buy. We're seeing that on a very compressed small time frame with these treasury plays, again, assuming it is a treasury play, where it's going to come back down to earth and find some value. And wherever this top ends up being, just get your Fibonacci retracement tool out and let's just assume the top is going to be there, right? And then you measure out that move and then you can anticipate, okay, I'll get some support here at $4.41, which would make sense with the volume cluster, or at the 50%, which also makes sense with the bottom of that volume cluster. And then you can look at getting into a position, but I wouldn't advise getting into a position right now. Okay, whoever put in that request on SQNS, they also requested TWSCF, which I don't find anything for. There's TWSCX, but I don't know what to do with this chart. This is an odd one. So maybe the ticker got put in incorrectly. If you do have the correct ticker and want me to check it out, let me know and I'll do it in the next video. Okay, the next request was for AI Ring Complex and AI16Z. Unfortunately, both of these AI crypto plays had a lot of hype in them and then just had the life sucked out. And right now, I'm sorry to say, while I had a position in this that I sold a few months ago, it just looks dead to me. I mean, this price has been in this range around 3 cents, not doing anything, zero volume on the chart. This really looks like a dead crypto, and I'm really sorry if you got into this at much higher prices and are holding on to it. I know it's painful, but I would move the assets if they're still worth anything into something that is moving. And then if we look at AI16Z on Binance, slightly better in terms of there being some volume on AI16Z. This bounce and came back down. So let's just see. Okay, we're finding here is our ultimate low. That was at 10 cents. Again, this came down from $2.40. So very painful to hold through all this. 99.9% of crypto goes to nothing, even if it has a good narrative and that narrative falls out of favor, you can see how this can just get hurt. But if you're looking at this in terms of a base, we had this low right here, and then we've had a very strong base holding right here at 12 cents and change, 12.5 cents. And now we're bouncing away. So what I would want to see on this is two things. We had a little bit of a volume spike here, which is interesting that the volume is slowly picking up during this time. So keep an eye on that. It's definitely dropped off right now at this top, but I would just be watching for this. If we come back down with this dropping off volume, do we find a higher low right here? And then can this next bounce make a higher high and get us above this volume cluster? So above that 20-cent mark there. And then I imagine with this low volume zone, we might actually move from that 20 cents to that 28 cents a bit more easily. Ultimately, this still has a lot of work to do. We are forming a higher low here compared to this bottom, but this price action, to tell you that it's going to be back in an uptrend, needs to break above that 40-cent level. So that would look like breaking above that, then finding its new support base, maybe back at 30, and then continuing on up, which is asking a lot of this. But this one, compared to AI Ring Complex, at least has some signs of life. It still has a pulse, whereas the other one is dead as a doornail, is the saying? Or is it dead as a doorknob? No, it's dead as a doornail, I think. I don't know. It's a saying I never use. I don't know why I just thought of that. Let's keep going. Okay, next request here was for AXON, Axon Enterprises Inc. I have no idea what they do, but the trend is definitely strong. We're above the 200-day moving average. It doesn't look like a treasury play, thank God. It didn't just spike all of a sudden here, but let's just go out to the weekly quickly to get a broader picture. Okay, this has been running for years now and is looking quite strong, but on a weekly scale, I'm just worried about these large candles. I don't know what they do, but it seems like it might be very much news driven. And you can see a lot of these correspond with earnings. And we have earnings coming up again. When is that? Sorry, my webcam's in the way. On August 11th about. Let me go into the daily to sharpen that up. But yeah, earnings are really driving the price action on these extreme spikes. We found a bounce right here. So I'm just looking for previous tops providing a bit of support now. So if we look at these previously weekly tops, we are finding a bit of support right near that. And going into the daily, you can see that playing out. Okay, so on Tuesday, August 12th. So watch that for volatility most likely coming into this name. You would want to see this support zone holding here between 699 to 717. There really isn't a good underside support to draw unless you're mapping things just off these 2 points. Unfortunately, there is not a whole lot we can learn from this chart. You know, it's near all-time high prices. So you're definitely taking a higher risk, but when things are in price discovery, they can keep moving. And, you know, just if you want, we can run a fib-based extension. So let's see, between this previous peak to here to this bottom, let's just take these swings here. So from this peak to this, the low price is right here. Actually, you could say it's actually right there. That was a few cents lower. So then we'll go low to the peak and then anchor that to our low right there. So we got some resistance here at the 786 level, and then we are finding, well, we're not really into a zone for support, but most often we'll get at least to that 100% extension, which right now is at 911, and if it can make it all the way to the 1618, it would be 1185. I have no idea what these guys do. I would advise with a stock like this where there isn't a lot of historical price action in the range and it's really beholden to earnings, you need to research this company and really look at the macro for their sector to get an edge on an asset like this. Otherwise, it can be a very risky play and one that doesn't necessarily lend itself to just trading off of the chart and the price action with as high a probability of success. Okay, and last request is NVTS, which at first I was going to say it must be another treasury play because we have this high volume spike and this gap up open. But because it's semiconductors, I'm open to the idea of this actually just being a good semiconductor play. And maybe they had a new deal or something that was announced. Usually when you see spikes like this, it corresponds to some kind of big partnership that's going to help them expand and find value. So I wouldn't anticipate, we often talk about gap up opens closing. if this is really something positive that's changing the underlying revenue for the company, I don't think we're going to get back to that zone, but it's been an impressive run from that $2 to $9 here. We have our previous, let's just go on the weekly to find where our all-time high is. Okay, so from the IPO, this is actually a great example to sharpen up the idea of what we talked about before. This had two spikes. It had the IPO spike and then came back and found a base. And then they maybe had earnings or some kind of partnership announcement. And it went off to the moon to $22. And then IPOs will often do this. They'll roll over and then find their base, which we now have here. And seemingly now something good is happening for NVTS. And let's go back to the daily. Now we have this gap up open. We're assuming this most likely isn't going to fill. And we made our high. Now we want to form a higher low from this. So we've got a lot of room to form that higher low. Ideally, with something that gaps up, I want to form that higher low above this gap up open at the $4 mark, $3.98 to be precise. And we can just draw our Fibonacci retracement tool to get a sense for where we might find support. And actually right now, where it bounced today is the 50%. So that's a good sign and a good risk to reward entry because you have a clear invalidation. We know the 50% is one of the most common retracement areas here at $5.60. And you can set your stop order just below in case this drops down and then goes to the 382 at $4.72. So you have a clear invalidation. If you know more about this company and their partnerships and it's a name you believe in and you know their revenue and EBITDA and all that good stuff, then, maybe it's something you want to play. I just don't know enough about the fundamentals of the company, but if I was chasing this on a move, this would be a zone where I would be considering an entry. And if we just go back in time to map out some levels, I don't know if we can learn anything from that, but look, this previous low right here is sitting right at the 50% where we found support and support. So yeah, I love it when stuff like that works out and there's confluence. Just telling you that this zone, yeah, of course, the price action wicked a little bit below here and a little bit above. But this general zone that we're getting into in this little pocket here, so, again, this as a support zone as opposed to the exact price at the 50%, is a good area to anticipate a potential turnaround and more northward price action. If you want to have fun and get speculative with some fib-based extensions, we don't know this is the bottom. So assume this is the bottom and the price action bounces away. You could then do something where you go off this low to the high to anchor that there. And then that could give you some overhead price targets. But this is too speculative at this point. To really do that with any degree of confidence, you need to see the price action bounce back up and away and know that this is the higher low that you're anchoring that off of. So that's it for the charts. Until we get the Patreon going, just keep the chart requests coming here. And thank you for the positive feedback on the idea of starting a Patreon. On Friday, we're really going to have a much better picture of how markets are reacting to initial earnings from the financial sector. So that will tell us a lot more. I'm sure we'll see much more in the price action to give us a feel for how the latter half of July and the beginning of August is going to shape up. I look forward to seeing you guys on Friday. Bye for now.